Good morning, ladies and gentlemen, and welcome to the show. Today is September 25th, 2020. It's a Friday. TGIF, guys. Anyway, I can see a future where that's not going to apply any longer because nobody will be working. Honest to gosh, guys. Let's get started. Let's open up the charts right here and take a look at what's going on. Brexit's in the news again. At the end of this year, December 31st, there's going to be a big event that surrounds Brexit and possibly big-time Brexit chaos. We're waiting to see how this develops. It says we've been close to a no-deal upheaval before with several 11th-hour stays of execution, but the Brexit transition period expires at the end of the year, and in other words, it could be a huge problem coming up with Brexit. But we got all this second wave business going on at the same time too. Now, last night I was on and watching two different economists, and they had two different economic positions that they were taking. One of the economists was taking a position that the system's going to deflate, that the Fed can't control this. It's going to spiral out of control. The dollar's going to go way up in value. Everything else is going to be on a fire sale sort of position, right? And that the markets will roll over and everything will crash, basically. And the other economist I was watching, he was in the position, well, the Fed's just going to keep on supporting the markets, and the markets are going to go up and up and up to infinity. Well, these are completely two diverse, directly opposed opinions. One believes the market's going to go up to infinity, and the other one believes it's going to crash down to nothing. You know what's really going to happen? I'll tell you right now. Both. Well, you say, Glenn, how can both of these things happen simultaneously? It's happening right in front of your eyes. Right now, we're in a crash cycle. There's no new stimulus coming along and everything, and the Fed's sitting back there waiting to see what happens. I'm going to tell you what, they're going to do both, because the markets are going to start to tip over and go down. Everything's starting to go down. How far are they going to let this go? Probably not that far. Then things will go back up again. And we're going to keep going through this cycle of them not giving enough money, basically, and everything's starting to deflate, and then them pumping out a whole big bunch more money, and the market going back up again. This is a cycle we're going through. What's happened is it started a cycle, and every time they pump out more money, it's going to get bigger and bigger and bigger. The amount that they have to pump out, because this whole thing has went exponential, and it's going to lead ultimately to a monster of a crash. It's off in the future yet. This monster crash. It's going to be an unbelievable crash, and it's coming in the future. Probably, I can't tell you exactly how far, but I'm thinking in my mind probably within a 2-year period. It's going to, because they're going to hit the end of the wall. They're going to hit the point where they're going to have to create so much money to keep it going that they're going to create a hyperinflation. Hyperinflation is going to take everything down. Ultimately, that's where we're headed in the end, because they can't let it completely deflate. They're playing this game right now, this silly little game. In Britain, they call it silly beggars. They're playing silly beggars, where they pump some money in, and then they sit back and wait and see how far that'll get them before they pump the next bunch of money in. They're trying to make the money last as long as they can, but every time they do this, it's going to take more and more money. And ultimately, they're going to trip that thing in the end where people lose faith and confidence in what they're doing and their policies and their money printing. People are going to lose faith in the end. They're almost there. I mean, it's almost there. This whole thing could fold up rather quickly once people lose faith. Once investors and everything lose faith. And, when that happens, that's when you're really going to see the big pop in gold and silver, because that's the real foundation. Everything else is just fluff. It's all just like a bunch of feathers. Gold and silver is the anvil inside that big heap of feathers. Where do you want to be? Where do you want your money? Anyway, look, guys, I know I'm stressing this a lot. This no-deal Brexit's coming. let's take a look at silver prices today. We're looking at $22.90. It's down 23 cents. Now, you know what I told you? All the rest is just a bunch, picture it in your mind, it's just a bunch of feathers. There's no substance to it. Gold and silver is an anvil. And look, the price is down again on silver, $22.90, down 23 cents today. It's taken a tremendous smash, getting almost down to the prices it was back before, all this happened. This is just absurdity as far as I'm concerned. But it's a game that they're playing. I explained the game to you a minute or two ago. Silly beggars. That's what we'll call it. The game is silly beggars. And they're going to keep playing this game as long as they can get away with it. But we all know how this ends because math determines how this is going to end. It's when exponential. Okay, let's take a look at the price of gold today. $18.60 today. It's trading in a fairly narrow range. It's down $8.50. Let's take a look at cryptocurrency. $338 billion today for the industry, 58.2% Bitcoin dominance. We see the Bitcoin dominance is still up kind of high. If it drops down into the 57s, just that little bit, between 56, 57, can make the difference whether Bitcoin is really bullish or that's one of my big signals for the cryptocurrency market is the Bitcoin dominance. Because when they're out there buying all these altcoins and the Bitcoin dominance goes down, that means that they're bullish, right? The investors. When they're selling off those altcoins and they're moving into Bitcoin in exchange for the altcoins, means that they're nervous. They're trying to go for the real safe haven, which is Bitcoin, and they're letting go of some of their altcoins. That's a bearish signal. And so we're still under the bearish signal, but Bitcoin price is up today. It was 10,400 yesterday, and today it's 10,600. It's up a little bit, a couple $100 on the day. So let's take a look at the Dow Jones today, and we're seeing extreme volatility. I come in 1 minute, it's in the negative. I come in the next minute, it might be 100 points in the negative. I come in the next minute, and it's 100 points to the positive. They're a mixed bag, and the reason why they're a mixed bag is half of the investors out there think the whole thing's going to deflate. And so they're playing conservative. And the other half of the investors out there are bullish as hell. They're thinking it's going to go to the moon, that the Fed's never going to stop printing. So we got a divided bunch out there, just like we got a divided bunch in the country. Half of them are blue and half of them are red, and they're not going to get along at all. They're like oil and water right now. Everything's divided. Everything's upside down right now. Let's take a look now at crude oil. $39.95 today. It's down 36 cents. They're going to keep it around $40. I think they got a put in. They're going to keep that thing right on the $40 mark. That's what I think. I think that's what it's been doing, staying in around $40. It goes up to 42, comes back down to 37, goes back up to 40 again. It's been doing that over and over again well, let's take a look here. Let's take a look at the last, say, 6 months. Look at that flat line across the top there around $40. It's absolutely ridiculous, but I think they're controlling the price of crude oil. I think it must be OPEC. Anyway, let's take a look at the U.S. dollar index. Oh, we forgot bonds, guys. We forgot bonds. Here's your bonds today. There's your bonds today, our funny picture of the day. That's a funny picture I was going to use yesterday, but I'm using it today instead. So here's our dollar index, 94.69. The dollar's creeping up again, a little bit higher. Shows you how many of them out there right now are thinking it's going to all deflate. And, there's a lot of them. And this is why the market's not going up anymore. And basically, that last big impulse of money we had back in March, it's pretty much run out now. It's 2.2 trillion. It lasted a while. Really pumped the markets up, didn't it? But they're waiting on the next stimulus package, and they're going to only put that stimulus package out there if they really think that they need it. There's a lot of them probably right now are saying to themselves, "Hey, everything's fine. The virus is getting ready to go away and everything, and we can get away with not doing it." And some of them out there are probably saying, "Oh, we got to do it right away. There's people suffering and everything." And see, we look at government as one single entity. Like it has a mind, like it can think like you or I think. But actually, it's a whole bunch of individual people with all different ways of thinking. That's the truth. The real truth of the situation. Okay, thank you guys for listening to my show. Like and subscribe. Give me a thumbs up, and we'll catch you guys in the very next episode. Bye-bye.